Welcome to Moving Iron with Casey Seymour and Greg Peterson, the podcast for anyone and everyone involved and interested in the business of ag equipment. If you want to understand what trends and market forces are impacting the price of your iron, you've come to the right place. Buckle up, it's time to move some iron.
Hello and welcome to Moving Iron Podcast. This edition of Moving Iron Podcast is brought to you by John Deere. Got Greg Machinery, Pete Peterson on to talk about what's happening in the marketplace. Greg, how you doing today?
I'm doing well, Casey, and Happy New Year to you, my friend. Hopefully,
Happy New Year.
26 will be a good year. We can be hopeful.
Yeah. Let's hope that it's not a repeat of 25 in a lot of ways, so we can push things forward a little bit. And like we've talked about in the past, like I kind of feel like this is a bottoming out of a year, kind of a stabilization year where we kind of figure out where things are going to go from here and start moving up. And we're seeing some things that kind of start pointing towards that as we go through there. But, Greg, as you look at 26, this is the time, this is always that point in time where I try to figure out what are the things I'm going to pay attention to this year that I didn't pay attention to last year, or do I need to have a little more gravitas on a little bit when I'm looking at what's going on in the marketplace? So I guess when you go through these cycles, and you've been through a lot of them, when you go through these cycles, what do you pay attention to more on the tail end of these things than you do on the front end of them?
Well, it's interesting where you bring this up right now, Casey, because we just flipped the calendar. So when you flip the calendar, when it comes to used equipment, of course, November, December has always been kind of go time, and it was semi-shocking what we saw in the auction market November, December of 25. That stabilized market lifted, and used values went up. They just did. And so now that the calendar flips, I'll be sort of watching, lower activity in January, early February, but early signs are pointing towards holding what we saw at the end of 25. Just before we hopped on our recording here this morning, I posted a note about a tractor yesterday, and it's pre-def, of course, and pre-def is what it is, but it was a 99 model, a 7810 Deere two-wheel drive, 5,007 hours on it, one owner, super sharp. My friends at Kiko Auctioneers out in Ohio sold it yesterday in Salem, Ohio. Went for $75,000. And a very common theme here throughout the second half of 25, Casey, where when I look at that number, 75K, a two-wheel drive, and I pull up all the other John Deere 7010 two-wheel drives with over 5,000 hours, I find that's the second highest one ever. And the only higher one was April 29th last year on a sale in, I think, a niche, North Dakota. So, I think I'm just kind of watching again the volume of sales, which was definitely up second half of 25, more farmers either downsizing or just, getting out. Mm-hmm. But despite the increase in number of sales, I guess I saw two things that I've never seen before at the end of last year, Casey. And one was that normally when the number of sales goes up, pricing levels generally fall. Econ 101, right?
Right, yep.
And the other thing that I've never seen before, we're seeing right now, is when used auction values are lifting, and all over my 36-year career, that's always signaled strength for new equipment sales. But this is the first time I've ever seen used values going up and new sales are like crickets. So To me, it feels like 26 will kind of be the same. And so we're just kind of monitoring as we go these kind of interesting trends out there right now.
Yeah, for sure. So to me, a couple things pop out to me as I'm looking forward, and these are things I'm going to pay close attention to as the year progresses. We saw a big buildup in the 3 to 5 year old equipment out in the marketplace, and that bulge kept getting bigger and bigger and bigger as the year went on, which you would expect it to, because that was the last big run of new equipment sales over the last 3 to 5 years, right? So you'd expect to see that. The one thing about this about the marketplace we're in now is that there wasn't any I don't want to say any, but there very few new machines sold, which generated hardly any trade-ins to come in on that stuff. So you've kind of got a diamond-shaped funnel, right? You got a bulge in the middle, and you're leaning at the top, leaning at the bottom. If you look through where December was through all the way through December to where we're at today, there is a significant number of 3 to 5 year old machines come off, which we talked a little bit about that as we kind of wrapped things up last year, the number of machines that were coming off there. But that's really whittling down that supply, which is great, which you need to see that happening, right? The backside of that is that as those machines come in and get sold out, the trade-ins that come with them are going to be somewhere in between 6 to 10 or even older machines that come into play. If you look at the 6 to 10 year old buckets and the 10+ year old buckets, you're seeing those machine numbers rise, which you would expect to see that. What's interesting about that is typically, like you were talking about, our friend up there in Ohio, Jim.
Rachel?
Randy Reitzel, yeah. He was talking last time he talked to me. He said, "Hey, we're running into a situation here where we're gonna be running out of equipment soon." And what he's referring to is that 6 to 10 year old stuff, and that typical auction range stuff. Greg, I think this is the first time in my career where I can point at saying that the true quality of the piece of equipment is going to really carry the day more than anything else is, because you start looking at 6 to 10 year old stuff, you can. There's 5,000 hour machines, then there's 5,000 hour machines, right? There's ranges of what that looks like, and they're not all the same. And I think that is when you start looking at, does this machine have the specs I'm looking for? Is it a high spec machine? Does it got low hours? Does it got good tires? What about it more than anything? Tires, especially, you start looking at stubble damage and the price of tires these days. As you start looking through those things, I'm looking at a marketplace where there's going to be a lot of auction age machines, 6 to 10 year old stuff, 6+ year old stuff that starts making its way to auctions, even more so than we've seen in the past, because the availability of that equipment coming into the place. But it's not so much that, hey, we got a bunch of 10-year-old tractors that we're going to go out and sell. It's like, do you have a bunch of 10-year-old tractors you're going to go sell? Or do you have a bunch of 10-year-old quality tractors that you're going to go out and sell, which is going to set the bar as to what that marketplace looks like. And I think there's an opportunity here that you see an upward push of value than a downward push of value.
Yeah, for sure. I agree. I think, you're talking about on the dealer side, on the dealer lots, so much of that, 3 to 5 year old stuff came off end of December, and to an extent, very noticeable from a data perspective. And that really jives with, what we've been seeing on the auction market. Generally, again, farmers, if they're not buying new, at least on the grain side of things, and this period has been stretching out now for a while. And the super fascinating thing to me, Casey, and we've talked about it a little bit, is farmer mindset and chatter. So I was all over the U.S. covering auctions in November and December, and I mean, I love documenting the prices, but the real fun is just talking to people, and it becomes clear that there's maybe a collective reset on the farmer side. Like, we were pretty equipment heavy, and we had a lot of late model iron running on our farm. Right or wrong, that's just the way things evolved. And now this period of last few years where they're not buying new and the trade cycle slows, and we live in an age with social media. You pick up your phone and you see a podcast or whatever, farmers. To me, this mindset is taking more firm hold with farmers as times are challenging like this. So then when you start talking about the supply realities on a dealer used lot, that gets really fascinating, because that diamond shape you're talking about, if we compare back to past downturns and how farmers reacted through those based on the level of inventory dealer side, this is different. Like I say, I've never seen before where sales of new are stagnant and auction prices are rising. 36 and a half, I've never seen it. But I think it plays into the reality we're at right now. So it really, like you said, it comes down to whether it's a 2-year-old, 3-year-old, 7-year-old machine. Is it one that's been pounded on, or is it, look at that? Oh, look at that one. That spec just right. It's got those hours. What I'm seeing at auction is when those machines show up, you get that double premium because 4 guys are on it. That's what I'm looking for. And you see that auction price rise. So it's not all just the pre-def stuff.
Yeah.
Now it's becoming that, it's that 7-year-old one that's just right.
Yep.
And this goes back, one thing I've been telling the farm audit, not telling them, but just like our auction data screams it, is when you take great care of your equipment, it basically, Machinery Pete says it pays to take great care of your equipment. So whatever you can do to facilitate that. And now it's interesting. Farmers are very smart. I'm starting to see more, if it's a private sale situation or even at auction, if they're having their own retirement, starting to see the farmer on a video talking about their equipment. So our friend Adam Marshall with Adam Marshall Land and Auction out of Kearney, Nebraska, last night posted a video. He's got a farmer. I think his last name is Buell. I can't remember if it was Mike. The sale is today as we're talking. It's happening right now. But Adam got his camera and put Mike front and center next to his tractor and combine and said, Mike, tell me about your tractor. Now, Mike happens to have that stuff that you and I are talking about. Ooh, look at that. It's just right. And now when you combine seeing the farmer talk about it, now you've turned maybe a premium into a double premium, because the guy sitting up in my way in Minnesota goes, oh, look at that Magnum tractor that's selling today. Adam Marshall in Nebraska is selling. And I heard the farmer talk about it. And that's why we're starting to see, that part of the business is exciting. Auctioneers and dealers and farmers figure out new ways to market your used equipment and unlock these premiums, that used to be sort of semi-locked, where, in your chair as a used equipment manager, you would take a trade from a great operator in Nebraska locally, and everybody knew this guy, and it's like, oh, that's Joe's combine. Oh, okay, well, I'm willing to pay more because that was Joe's. We know Joe takes great care of it. And I've 36 years, I've seen that at auction, the same thing. So as this diamond-shaped bubble you're talking about works its way through, how do dealers deal with it? How do auctioneers deal with it? And again, if you're a farmer, again, like we've talked about down the stretch of 25 here, I think the more proactive you are, the better. Because if you extrapolate that diamond-shaped bubble, Casey, I'll throw this back to you. If the current environment stays like it is, new sales, not really much push, corn and beans are depressed. If, say, we go another 6 months, 12 months, 18 months, 24 months, what do you think that does to that bubble on the used equipment market?
Well, I think it just further solidifies a couple things. One, if this continues like this, and we still see the same number of new equipment being sold, which I don't think, I don't see a future where there's going to be a huge number of used pieces or new pieces of equipment being sold just because of the price. It really limits the people that can do that. Even if corn prices and soybean prices jump way up, I just don't see an environment where there's a lot of opportunity for everyone to go out and buy a new piece of equipment like we've seen in the past, right? Up until this point, hey, when we had $7 corn in the early 2000s and stuff like that, everybody went out and bought something new. It was just how it was, and it was everywhere. Right. And 12, 14, 13, 14, 15 time frame, you could tell that by stuff that was on the lot, right? There's a bunch of one-year-old stuff out there. I don't see a future where that comes into play. So what's that mean? So you open this door, this Pandora's box up now, where you have this limited number of 1 and 2 year old pieces of equipment on the marketplace right now. To me, this is kind of I would say if I go back, if I'm still doing this as long as you've been doing it, Greg, and I turn back around and look at my career, to me, this is one of those points in time where I say this is when the market changed into something else. And I think this is, your only other option, if there's not a bunch of used equipment on the marketplace, is if your only other option is upgrade kits that we've been talking about since 2015, right?
Right.
You start looking at all the different stuff out there that Precision Ag's been doing, and Deere's got, and all these different things. I personally think there's going to be some bankers out there that are sitting and talking with the guys like, hey, you probably can't afford with your current situation to go out and buy a brand new $800,000, $900,000 piece of equipment, but you can afford $250,000 or $300,000. And let's take a look at what's available in that space. Is it a late model, low hour something? Probably not. Is it going to be something that's 3 to 5 year old? Well, that's what you already have. So your best option now is an upgrade. And I think we're looking at a turning of the page of sorts when you start looking at how inventory fits into the market and all the stuff that goes on there. Because ultimately, Greg, it's going to get without the front end of the funnel being filled up and pushing its way down, and especially as you start kind of breaking down that middle part where there's a lot of inventory right now.
Yep.
If it starts coming into play where you start seeing a 2-to-1 ratio, if you had, let's just say you have a 500 used combines, 1-year-old combines in the marketplace, which I think right now we've got, as of this morning, there are 842 1-year-old combines, all makes, all models, sitting on the marketplace right now. And to say you have a 2-to-1 ratio, as those machines start to trickle through, that's not a lot of used combines on the market, right? Right now we're at some of the lowest numbers we've seen in a while for combines.
It would be really interesting, isn't it, if we could go back and pull the accurate number on 1- and 2-year-old combines where we were sitting, say, in 22. If we'd had this conversation January 6th of 22 or 2020 or 2015. But you're right. I'm with you. I think it's a game changing. I think the market has changed. This is why, again, I don't like to look backwards too much, but there are lessons. And I was motivated to write that Farm Journal column a year ago and just said, folks, hey, this is a different ballgame because of the stuff we're talking about here. And, the price of new is not, at least to now, is not being adjusted downward. And, the number one thing is the manufacturers want to hold that price point. And we understand why. So if that ain't coming down and it's got so high, and again, I've never seen this period where basically the farming nucleus is going, wow, do we really need as much iron? So that can drift into a lot of different areas. I mean, do you rent? Do you share ownership? I mean, there's all kinds of different possible paths forward. The longer we stretch this out, it's just, you and I, before we started recording, we were talking about one of the aspects of this, Casey, that you've noticed monitoring the retail side on the dealer lot, and I've definitely seen on the auction side, is that if you take good care of your stuff, it can have higher hours now and still be just as desirable at a higher hour range than 2-3 years ago. You'd have thought, well, that's too high hours. But now it's like totally at play, and we're seeing stronger auction pricing on good condition stuff with higher hours.
I think that's it.
Everything's changing, and it's. I think wherever you're at on this, on the dealer side, on the lending side, on the farmer side, and hopefully manufacturers got their eyes open on the top end too, because you need to be paying attention to all these different factors, because the ramifications playing out. We can't rely on what happened in the past to know what's going to happen the next year or so. Because like I say, I've 36 and a half years, I've never seen a period where new sales are flat, no momentum, and used values are going up noticeably. That's new.
Yeah.
So.
Yep. So I think you hit on something there. I think that's very important too. As the number of machines start to shrink, the opportunity for what do you even have what I want to upgrade to, right? I'm not just going to trade for the sake of trading. Maybe I do, maybe I don't. But there's some options out there that are going to start pointing towards, well, I'm going to go ahead and run this one more year. You saw a lot of that coming out of COVID, just for the sheer fact of the number of machines that got canceled. Guys ran them another year, just flat didn't get the trade in that they wanted, and here they are today, still sitting in this machine. These hours have gotten older or gotten longer on these machines,
right?
And I think that's a trend that you're going to see, like we were talking about before we started recording. That what used to be 500 hours may be falling in the 750 hour range today. And those and the pricing that you're used to paying for at 500 hours now 750 hours, and so on and so forth down the line. All that stuff makes a huge difference in what the makeup of the equipment looks like. When I first started doing this, I used to break it into 0 to 300 hours and maybe break it into maybe 150 hour increments inside of that. But really, it was kind of 0 to 300 because that was kind of, you didn't have a lot of 50 hour machines, you didn't have a lot of 100 hour machines, but you had quite a few, 300 hour and less stuff. Today, I think you kind of have to start looking at that a little bit different, and maybe you need to stretch that out to 500 hours now as kind of that approach. And where do those machines lay in there at? again, like you said earlier, one of the eye-opening experiences that I had way back when, 5, 6 years ago, was a guy trading in a combine, and the combine he was trading in, the trade difference on the combine he was trading in was more than it cost new when he got it. Right. So, I mean, that's a shell. I mean, I paid $350,000 for this. Now you're telling me I needed my trade difference is $400,000. Like what?
Yeah.
What?
That's a sea change, right? Right.
Right. So those are things
Yeah.
that you pay attention to. Those are some of those, canaries in the coal mine out there that really start pointing towards a shift in direction with the marketplace. And we're seeing some of that stuff take place now just because of, again, like you talked about, I don't see a big 2026 order writing period for new across any of the manufacturers any more than what we saw last year. It may be a little bit here and there, but it's just the price of equipment has gotten to be so expensive that it's a select group of people, size of farming operation, number of acres, bushels, those kind of things, that are going to be driving those new sales. And again, it's going to be the really big operations are going to have the opportunity to buy that can have maximum discounts from the manufacturers. They're going to be able to buy the new stuff, and it's going to again shrink the available machines that are out there. And again, that's a whole nother conversation of, we pretty much saw in the marketplace that about $600,000 is all that a used piece of equipment is someone's going to be interested in a piece of equipment at. How many pieces of equipment do you watch sell over $650,000 at auction this year?
Not too many, but
Not too many.
I will tell you one. We did see one December 16th up in Canada, and it was the first AF11 I've ever seen sold at auction. Now it did sell with a pickup head like they do in Canada, and I forget what the pickup head could add to it, but it was a 25 model AF11 with I think it had like 250 engine hours on it or something. It sold for 1,157,000 Canadian, which equals 841,139 US. I found that fascinating in this current environment. Now, we talked a couple weeks ago about how many 25 models are on the market, and this looked like a beautiful machine, but hard cash 841 when times are tough.
Yeah.
You're like, wow. And the same sale had two X9 1100s that, by the way, sold very strong. They were like six. One was like 650. One was, I think, six-ish. But you're right that there's always been a line on the auction side where you just, it used to be 400,000. You couldn't break that. Then it became 500. Then it became 600. It feels to me sort of like the farm audience is saying enough.
Yeah.
We don't want to drift that to 700 to 800. But then again, we just saw one for 841. So,
Well, yeah.
I don't know. It'll be fascinating to see. I see this exact same thing played down through the age of equipment, Casey. So, again, I mentioned that 7810 that brought 75K yesterday in Ohio. On New Year's Eve, my friend Jeff Boone out in Indiana had a farm sale for David Squires New Year's Eve. Centerville, Indiana. He had a Magnum 7120 two-wheel drive, looked just sharp, beautiful. 4,902 hours, went for 60K. Now, to hit 60K in Machinery Pete's auction world, up until recently, you had to have like a 2,100 hour 7120. 4,900 hours, it wasn't happening. Now we see it right and left.
Yeah.
And so it's the same trend that we were talking about on the 3 to 5 year old stuff.
Yeah. Yeah, it's going to be interesting to watch how the year plays out, and again, tracking these numbers through and what things look like. We got a big USDA report coming out on Monday, the 12th, that will basically kind of say either we hit the number or we didn't hit the number that the USDA put out in final numbers, which everything kind of points to that it's not going to, but we'll see what the USDA says, and that's always a fun conversation. But
always fun, yes.
Watching those things happen, and then you watch things move out again, kind of like we've talked about in the past, where equipment purchases start falling in on the list of things that I need to make sure that I get paid for first. It's falling down that list, and I think that's going to, especially right now. I mean, there's a lot of guys that are, they got to get a lot of stuff trued up with banks and other things, and buying inputs and all that kind of stuff to make sure they can move forward there. And we're moving into, renewal season when we start looking at lines of credit and operating notes and those kind of things for the farm. So that's going to paint another picture on top of that. So it's a lot of stuff to pay attention to here the first quarter of the year.
Yeah, one thing, Casey, I go back to your diamond shaped. I'm kind of a visual learner. Despite being a numbers guy, I find visuals are very helpful. So when you talk about that diamond shape, that where that glut is, and for years I've told people through various cycles that our data has sort of screamed the value buy on the used equipment side is in that 3 to 7 year old range, because there tends to be a lot of it out there, and then from doing this 36 years, people know Machinery Pete kind of says once you get to be 10 years old and you've got a clean low hour machine like you talked about, do you have the right machine? Is it really good condition? Tell you what, if you got a 10-year-old well-maintained, lower-ish hour combine, skid steer, tractor, combine, sprayer, that has always been valuable, and I think it's going to get more frickin' valuable.
Yeah.
So, because of all this stuff we just talked about. So, in that wider part of that diamond bubble right now, you're in that, what'd you say, 3 to 5?
Yeah, 3 to 5.
Okay. Now, if I'm a farmer, I'm scouring that wide part of the bubble at 3 to 5 years old, and I'm looking for just the right machine with the lowest hours. And if you can acquire that now, your local dealer would be happy to, take one off their lot and accommodate you there. You take care of that thing and keep the hours a little bit low on it. Once that's 10 years old, you're going to have what everybody wants.
Mm-hmm.
So I think, to me, that's an opportunity here in 26. It wasn't 25. I think it'll still be early, at least the first part of 26, until if the wide part of that bubble shrinks down and we get back to what we saw in 21, where there just wasn't any used. That's the danger to me, is that bubble could shrink down, and we could, then you're going to be, whatever you need, new or used, going forward, it's going to be 21 again. And you're not going to like that, because you're going to have to pay too much on the used market, and you're not going to be able to get it on the used side, because dealers only going to have X amount to sell. So.
Yep. Yeah. And those are all that course line trajectory that you're talking about there. When you start looking at how do machines value proposition, this might be one of those first time in farm equipment history where you could sit there and say, it actually is going to pay me better to run my machine longer than it is, just because when it comes down to the value, right? So you start looking at how many people out there can afford I'm just throwing numbers out here, a $500,000 use something to a $350,000 use something to a $125,000 use something. Like, where are those buying? How many people are in those buckets and ready to buy?
Right.
And if you don't have a lot of people that can buy it at 500, then you better look at 350 and start seeing about what's that mean to my operation to run my machine one more season or two more seasons or whatever that looks like, because throughput and depreciation, those lines meet someplace. If you can ever figure out where your throughput and depreciation meet, that's the best time to sell your piece of equipment. And I think those equilibriums are going to be looked at a lot harder over the next couple of years than have in the past.
This is so much fun with you every week, Casey, talking about these things, because you're like me at heart. You're taking what's real now, data, and you're, for the benefit of dealers or farmers, you're looking forward, and we're just trying to bring things up. Now, one thing I would add to this mix, that's from a data perspective, it's a pretty important piece of the puzzle, is you were talking about how many farmers for different dollar buckets. One thing we have to keep an eye on is just the number of farmers.
Yeah.
Now through October of 2025, the number of auctions was up 15%. And in 2024, it was all dealer auctions. 2025, it was farmers.
Yep.
And I haven't calculated the latest numbers yet that take into account November and December, but it was a frickin' tidal wave of farm auctions in November and December. So that 15% is going to be pushing, my guess is 18 to 20%. And in this K-shaped economy, if we keep drifting forward, in terms of I'm 60, farmers older than me, tiring of the equity drain, will we look back at 2025 as the first year of the next big, you hate to say it, but the number of farmers really condensing?
Mm-hmm.
And how hard is it to replace? How many new farmers are coming in? So that's the other thing you have to look at, in those 500,000 to $1 million buckets of newer used equipment. As the number of farmers continue to shrink,
Yeah.
how does that affect these buckets? And it is what it is, I guess, but it's a noticeable trend, the number of auctions going up like it has.
Yeah, and it's the number of new farmers coming in that have never farmed before, that don't come from a generational exchange somewhere down the line. It's what that costs to come be a farmer. I mean, it's just it's next to impossible, I think, to become a farmer and really with the dollars associated with that. You know what I mean? It's hard to figure that out. It's harder. I think it's harder than anything else, any other industry.
Yeah, I would agree, and I think that we live in a country where things are still possible. Are they
Sure.
easy?
Oh yeah.
No, they're super hard. I have two examples I want to bring forward in Machinery Pete podcast coming up, maybe to give some hope along these lines. One with a 71-year-old farmer who's retiring, but with a definite eye towards trying to help. He can cash out, and he could get one check and call it all good, and that's easy and clean. But he's like a lot of most farmers that I know. They're concerned about their communities, little towns like where I grew up, and maybe there's some individual things that can happen, but if these macro trends with these numbers continue like we're talking about, I just wonder how long it will be until government will be forced to, or states to, like, holy cow, I mean, we got an issue here. We have to figure out some pathway forward for young people to get into farming at somewhat of a scale, or else this data that you and I are talking about, I mean, that's one of my Machinery Pete truths, is that math is math. You can yak at it and bitch at it all you want. It doesn't matter. Math is math. And we got problems coming. So we got to figure out some answers to those, or else we do so at our own peril.
That's for sure.
Not to be the cranky old guy.
Yeah, no, you're right though. I mean, that's where all this automation talk comes from. And that's where all this, robots and this, that, and the other thing, and AI and all that. That's what they're trying to fill the void with that, and whatever.
Yeah, different paths forward, and they all can be valid. But we need paths, and there haven't been many clear paths. Like, to your point before, it's like, well, how the heck do you get started?
Exactly.
I mean, it's pretty impossible. But we'll try to shine the light on a few paths that have been successful, and maybe that kickstarts some other ideas. That's the value of doing this stuff we do, Casey, is that some little shard we're yakking about, somebody goes, well, what about this though? And then that's where a good idea comes from. So we need a lot of good people thinking about this stuff.
For sure. All right, Greg, good place to stop. Folks want to reach out to you, have you come to their auction or speak at an event. What's the best way to do that?
Yeah, just hit our website, machinerypete.com, folks. There's an email link and a phone number. Call our office. We got great people there. I'm heading to Arkansas tomorrow to preview an auction by Witcher Auctions. Kirk and his team down there, fantastic. Sales in Pocahontas, Arkansas, January 22nd. We'll feature it on the TV show. So it'll be great fun to get down to Arkansas and, talk to some farmers down there.
Right on. Take a shotgun and go do some duck hunting while you're down there. Good duck hunting down that way. So.
It's actually about 40 degrees in Minnesota today. I looked and it was about 60 some in Arkansas. So I'll be happy for that.
There you go. All right, Greg, appreciate you being on the podcast. We'll talk to you again next week.
You bet. Have a great week, Casey.
All right, stay tuned for more Moving Iron podcasts after these messages.
Looking for more accuracy, more productivity from your current planter? Let's get exact with precision upgrades from John Deere. Start with Exact Emerge, and get accurate singulation and spacing at 10 miles per hour. Or choose Exact Shot to promote early root growth and cut fertilizer costs. And with Furrow Vision, save time by verifying seed depth right from your cab. Visit johndeere.com/planner upgrades and see why nothing runs like a deer.
All right, welcome back to Moving Iron Podcast Markets. I got Sean Hackett on here to talk about what's happening in the marketplace. Sean Hackett is with Hackett Financial out of Boca Raton, Florida. Wow, can't talk this morning. Sean, how you doing this morning?
I'm doing super good. Recharged from a restful Christmas and New Year's. And I'm getting ready for a wild and woolly 2026. Obviously, the invasion of Venezuela has started the new year with a bang. No pun intended.
Yeah, no pun intended. Yeah, you're right. That's it's an odd scenario. You look at some of the situations they have down there. I guess that's probably what we were talking about what we were going to talk about. Sorry, I should have brought this up, but you look at what that's done for the price of oil, and it's not really moved it much. But you figured that since it's one of the OPEC nations, that there'd be some one way or the other. You figured the marketplace would move, and it really hasn't gone anywhere. So I guess that's more of a testament to supply out there, Sean. But I guess looking at oil, what are your thoughts? Or we'll kick it off that way.
Well, remember, like 20 years ago, Venezuela was producing like almost 8 to 10% of world production. They were a major player. They produced that thick grade that's really, really good for making diesel. It's a different grade than light sweet crude, for example. But then, of course, Chavez got in there, and then Maduro got in there, stole everything from the company. All the infrastructure collapsed, production collapsed, and now I think they're barely 0.8% of world production. So they just don't really matter to the global. So I think the reason that oil didn't really react much is because they don't really matter right now. Now they have a lot of oil reserves, expensive oil reserves, meaning if you're going to go get them, this is not your cheap cost of production barrel, per barrel kind of supply. It just doesn't work at this price level, Casey. No one's going to go in there and put a bunch of billions and billions of dollars to rebuild infrastructure with oil in the 50s. It just, I cost production is $20 higher easily to get the crude out of the ground there. And even if they did decide, the Schlumbergers and the Halliburtons came in and the Exxons came in and pumped money back in there, it's at least, 5 years before you would see what I would consider to be a material impact. So there's nothing that this is going to change the supply demand equation for crude oil anytime soon, and it's certainly ain't going to change it with oil in the mid 50s. It's just not that crude oil. Now maybe Saudi Arabia can still make money producing oil because they have the lowest cost per barrel in the world, but definitely not Venezuela. So to me, I think it was more of a strategic geopolitical move because Maduro and China, Maduro and Russia were getting pretty cozy, and then Russia talked about maybe putting some missiles in there and all that sort of thing. I think the real reason we went in there, I know that they're using the oil as the reason because they don't want to tell people that they're really doing it for geopolitical reasons. But for the most part, I just think we did this to tell Russia and China, back off.
Yeah,
you ain't coming in here.
Yep.
Just back off. That's my personal opinion. And so I don't think this is going to be a material event to crude oil whatsoever. And at the end of the day, crude oil production is going to start to fall until prices go back up. And so I think this mid 50s is, no one can ever say for sure when it comes to crude oil, but it'd be hard for me to think that anyone in the world is going to allow crude oil to fall much below $55 a barrel. I don't think so. I think we're at the low end of the calendar year trading range, and I think somewhere this year you're going to see oil back at 65 or 75 for whatever reason. But I think that the negativity, the bearishness, the one-sided trade is so extreme right now on the negative side. We're probably at a low. If I'm a contrarian and I need physical diesel or I need physical gasoline or I need physical, oil, energy of any sort when it comes to crude oil derivatives or anything, I think this be a time to put some put some physical energy in my tanks. That's what I'd be doing. So
Yeah. Yep. Okay. All right. Sean, let's jump over and talk about a couple of things. You had a report come out last week. So, folks, if you haven't signed up for Sean's report, it's well worth your time. Go check that out and talk to Sean about what that report is. A lot of great information in there. Um, I don't know. We started talking about weather here, about June, July last year, kind of what you thought, what your long term weather cycle would look like moving into this winter. And so far, you've been exactly right with what you thought was going to happen. The western half of the United States has stayed warm and dry. I went down into Colorado, over into Wyoming over the weekend, and there's not a terrible amount of snow up in the mountains, which is a bad sign for us out here in the area where we require a lot of irrigation, ditch water, those kind of things to flow. So hopefully we'll get some more snow here as things roll on. Otherwise, it's going to be a tough planting season for us and growing season as well. But if you look east, you talked a lot about cold weather, and everyone I've talked to east here is cold, snowy, lots of snow on the ground. And especially if you move up in the northern parts of the United States, those temperatures have stayed cold, just like you talked about, Sean. As you look through your thought process moving forward with this, talk a little bit about what you see happening. As you talked about somewhere in mid to late January to seeing another big burst of cold weather come through. You start looking at some forecasts, starting to see that make its way in there. So I guess, Sean, as you're looking at this, talk a little bit about your long-term weather forecast.
So we had this record cold from late November into the middle part of December, and then we've had this warm up. In fact, this week it's extremely warm, but kind of a blowtorch week coming up here. That's a little bit of a surprise for me. If I'm always trying to be truthful about a forecast. If I'm going to, I thought we'd have a little more moderation. I didn't think we'd have this big back and forth like we had last year. But there's reasons to believe that this might be the last one of these. First of all, the La Nina is rapidly going away. La Nina tends to cause a lot of this back and forth, cold, warm type of volatility. If you look at the way that this La Nina is developing, I think we're going to be out of La Nina by the late part of January, Casey. And if you get rid of La Nina and you get into just neutral phase, that is going to provide a much more stable, cold, more persistent cold period, not as much back and forth like we've just seen. So I think that's the first thing to remember. Second thing is the MJO, which is the Maiden Julian Oscillation we've talked about on your show many times, which is this tropical convection that floats around the center of the Earth in various ways. And they measure the phases. It's phases 1 through 8, and it just determines where is it around the globe, okay? And there's certain phases that are needed to create the air transport of cold to come into to the center east of the country. Those phases are phases 7, 8, and 1. And if you look at where the MJO is right now, we're in phase 6. And we're going to be rotating into 7, 8, and 1 all the way out into mid-November. And then what looks like, if you run analogs, it's going to kind of collapse into like a very weak null phase. Whenever we've seen a winter like that, where you go into the cold phases and then you collapse into kind of a non-signal, it provides a more persistent, repetitive cold wave deeper into the season. So that is what I was looking for, because that's been my forecast. That I am surprised at this warm up we've had. I didn't expect the MGO to be this strong in phase 6, which allows for more of this, but everything should really deliver here later this month. And natural gas, which is had a big surge, has had a big credit. Now the market's trading like there's never going to be a winter again for the rest of our lives. The market has just lost its mind on natural gas. It's completely lost its mind about what's going to continue to happen here. December was a top 5 cold winter. even though there was volatility. January's going to start warm. It's going to end cold. I still think when it's all said and done, January is going to be a top 5 cold January. Um, just not persistent, you know. So if I'm thinking through, like I said with crude oil, you know, if I need physical natural gas, if I need physical propane or derivative products based upon natural gas at this price level after this takedown on this overreaction to this brief warm-up period, which is not going to last in our view, my goodness, I just think this, you know, if you're looking to, lock in some physical gas, natural gas of any kind, I mean, I would think this is an awfully good opportunity here. If you look at the strip price, which is the 12-month forward price for natural gas, and it's the average price for the next 12 months, we're testing levels that we saw in late September, October of last year, which was the lowest 12-month strip price we've had in 8 years. So we're testing 8-year lows on the 12-month forward strip price at this moment in time. That is unsustainable, in my opinion, and it's unjustified, in my opinion. So, you know, love the volatility, hate the volatility, but it does offer opportunities if you have the ability to take action when if you're on the, you know, depending on what side you're on. I just think you're getting a great opportunity to lock in some very economical natural gas and propane for the 1 to 2 years ahead, and that's what I would be thinking about for sure.
Yeah. Okay. All right. Thinking about where you're at now, you talked a lot about some real opportunity to see some cold weather come in, delay or a prolonged winter into March, into planting season. You still in that camp?
Yes. Now, to me, the better forecast in terms of what it means for markets is KC winter wheat, for example. I think that is where I would be looking for a weather-related reaction. Getting one of those shots right here in the center east part, North Tech, Oklahoma into Texas, into Kansas, where they grow the KC winter wheat. You could get some in SRW wheat a little further east, no question about it. But to me, I think that's where I would be expecting a weather-related effect. You come out of dormancy, there won't be a lot of snow cover. You throw that kind of frost onto a winter wheat market, it would certainly create some excitement. And the other thing you have to remember, it's been an awfully dry in the Western Plains. And I think it's going to stay pretty dry. So the drier the air, the easier it is to cool down and to get a flash frost. A flash frost doesn't have to last very long. It doesn't have to be a week of cold. It just needs to be one really strong cold night, and you'll do the deed. So, and if the winter wheat market takes off because of a frost, well, corn's going to go up. Mm-hmm. Well, if corn goes up, soybeans are going to you need a catalyst to get the shorts to cover, and then to start the battle for acres and all the things that would put into place. And so I think that if I'm thinking through the weather-related effect is going to be more from a winter wheat being too dry and too cold than necessarily, the market is very, very reticent to trade delayed planting very often, Casey. It just doesn't like to trade that very often. It's very hard to get the market excited about delayed planting because we can plant the entire crop in 2 weeks. The market always feels you're eventually going to get 2 weeks of a window and you can get it all planted. And so I think that the better thing to watch is for winter wheat to have a weather-related effect during spring to excite corn and soybeans, and then to watch for, okay, it's in the ground, it's dry, and now it's hot in June. Oh, shit. We had the sun-tied torquage thing that Sean talked about. Oh, that's right. The moisture from Tonga is gone. Maybe the 2023 near-miss Gleisberg cycle is finally going to occur in the 92-year differential, which is the statistically widest range we've seen in 1,000 years. I mean, I think that's the scenario that I'd be looking at more specifically, not necessarily that a colder spring is going to delay planting and cause excitement. I think it's going to be around dry, cold weather around winter wheat, specifically, more likely KC winter wheat, exciting the market. And, certainly the only other weather catalyst that I can see, soybeans are done in Brazil. They're made. It's done. The crop's done. I don't really think you could hurt it now for the most part. I mean, I think it's going to be very big and substantial, and that's a done deal. First half of the growing season is all about soybeans, and they're going to have a big crop. Those supplies are going to come in. So very, very, very hard to get excited about soybeans from South America. Even if Argentina dries out, Casey, they're so small relative to Brazil. I mean, they produce 50 million metric tons of soybeans, and Brazil produces 180, 185. I just don't think it matters. Now, it could matter to corn, though. So where I would be focused on weather in South America, I just don't see soybeans being able to generate a weather-related excitement, but corn it can. Because if it dries out in February in Brazil, like I believe it's going to, and it dries out in Argentina with some heat in Argentina, well, you have 50 million metric tons of corn production in Argentina, and you have about 80 million metric tons of corn production during the second crop corn. So there's 130 million metric tons of corn out of 170 total that's going to be impacted potentially by dry weather and potentially dry hot weather in Brazil. That could generate a weather-related move for corn. But like I said, if corn goes up, soybeans aren't going down.
Right.
It would drag soybeans up by their bootstraps.
Right.
But I would look for a corn-related potential for South America, but not this month. Not this month. And the weather looks really, really good. And we start planting in February anyway, Casey. So it's really hard to get excited about second crop corn when you haven't even started planting yet. But if you start planting in dry soil and it gets drier, the market will start paying attention. And then of course we have this USDA report coming out on Monday.
Yeah.
I don't expect anything exciting on wheat or soybeans at all. I don't think there should be anything. But on corn, I expect there should be a significant decline in yields, very, very meaningful decline in yields like we saw last year. Multiples and multiples of yields down. Whether they come all the way down to where they should or not, but I think they'll come down enough, and the market will have to recalibrate enough that I think we can get a material change in the price of corn from the low fours to the upper fours. Not that is going to create anyone to click their heels and buy their island on Fiji, but 480 corn pencils out a hell of a lot better than 440 corn when margins are as razor thin as they are. And so corn's got has a lot of good things going on with it. Exports have been outstanding on corn. We don't need China. They could leave the earth as we know it, and corn will be just fine. We know soybeans obviously, are struggling without consistent Chinese demand. We know cotton is struggling without consistent Chinese demand. Although at this price level, the amount of acres that we'll plant for cotton is going to be so low. At some point, you get the acreage numbers so wrong, and demand eventually does come back, that you get a complete mismatch. I would view rice and cotton as two markets where the economics are so bad and the cost of production is so high, and the amount of cost of inputs to put those crops down and the cost of equipment is so high that you're only going to absolutely plant acres that literally cannot be planted to anything else. And when you get acres that low, in my experience, something happens with demand, even if it's just a 6-month or 12-month bump up in demand for a short period of time, you have mismatch. And I think those two markets just have a massive, massive mismatch coming up. And you wouldn't need a whole lot of demand increases to create a significant tightness in the market. Our calibration on cotton and rice, even if demand stays where it's at, based upon what we think the acres are going to be, we could be looking at ending stocks broaching, 30-year lows in both those markets for the next crop cycle. So, I both markets are starting to show some life at the beginning of the year. If you look at cotton, it's up I think a point already, and same thing for rice, almost up a dollar already off the lows. I think I can't conceive that those markets are going to allow prices to stay this low through planting season. I think they're going to have to do something to tell somebody, maybe you should plant some cotton or rice, because it's just those two crops are so expensive to put in the ground. So those are interesting markets to pay attention to based upon just ridiculous lopsided economics at this point. So
Yep. Okay. You touched on it a little bit earlier, and it was one of the questions I want to make sure I ask you, but you talked about in your report a little bit that there was the last time that we saw a high sun tide torque force on the oceans with no El Nino, it presented the driest May and June time frame since the 1930s. And last time I saw this was back in about 2023, and it was really, really dry, and we got timely rains. Saved it. Just perfectly matched rain. Sean, as you're looking at this, explain what high sun tide torque force is, and then also what does that mean as we go into 2026?
Well, first of all, in 23, we were going from a La Nina to an El Nino. We were converting over. El Nino didn't kick in until the fall. We're looking at exactly the same scenario. La Nina's ending. We're going to El Nino, but it won't really kick in until the fall. Those kind of years can be very, very dry. If you have the right setup for some other teleconnections, like the negative Pacific decadal oscillation, which is the sea surface temperature differential out in the Pacific, where it's warm out west and it's cooler near the coast, we're going to have that scenario. And then we have cooler sea surface temperatures in North Atlantic. That tends to want to produce dry weather in the Midwest. If the weather is drier, it can be much hotter. That's why Phoenix can get to 125 degrees, but Florida, we just can't get hotter than 92 because our humidity is so high. You can only get humid air so hot. It just doesn't.
It feels like it's 122 when you're there.
It may feel that way, but the physical temperature is not, right? I mean, the nighttime temperatures can be super hot, like we saw last year in the Midwest. That did hurt the crop, but dry air can get super cold, super hot. So the drier the air, the more you can have extreme temperatures in both directions. In this case, obviously, the hotter temperatures. One of the things that we believe has kept July cooler than it should have been is the fact that we had this Tonga eruption, this 1 in 1,000 year event that has never been a part of any past 89-year Gleisberg cycle before. It's the first time we've ever had one of these. And it has been pumping a tremendous amount of water vapor in our atmosphere as those aerosols have been precipitating out of the stratosphere, going into our atmosphere, and then leaving. Fortunately, the government, NASA, measures this on a monthly basis. And if you look at where those moisture levels are now in the stratosphere, we are back to normal. We're back to where we were before the Tonga eruption went off, which means that the precipitating out of these aerosols is over. And so we should be back to the atmosphere acting normally again, instead of getting pumped with this moisture, which means it can be drier and hotter now than it's been the last several years. And I would have argued if it wasn't for Tonga, 23 would have been a Gleisberg cycle year. I don't think there would have been any way that you could have brought moisture in the month of July, because Casey, where it's dry, it tends to stay dry unless you have a dramatic climatic change that occurs to override it. And we didn't have a dramatic climatic change. We just had these showers come out of nowhere that just were really unexplainable, and they just sort of dropped this rain, and it just, I can't say I know for sure it was these aerosols precipitating out, but I can't come up with another rational reason as to why that happened in 23. 2021 was another year, by the way, that we had a very high sun tide torque force on our oceans. What this means, Casey, is the sun, the earth, Saturn, and Jupiter interact with each other, and they alter the gravimetric forces and those forces and how they're applied to the Earth's oceans. So we know that we get those high tide, low tide every day. We know there's a thermohaline system. That's this river that equilibrates the tropics with the north. But we also have upward motion and downward motion gravimetric forces, Casey. In this case, the planets are in such a way that it causes maximum upside force in our oceans. And that's what we have this year. Now in 21, do you remember what happened in 21?
No.
We had a Gleisberg cycle drought in the northern plains.
Oh, I do remember that. It was dry. Yes, I do remember that. Yep.
Spring wheat, Minneapolis spring wheat yields were down 35% from trend.
Yep.
Canada had a Gleisberg cycle drought that year. Now, it didn't come down to the ice states, and so corn and soybeans were fine. But so think this through. We had a Gleisberg cycle drought in 2021 when we had high sun tide torque. Remember now, that was before Tonga went off, okay? And we had a lot of heat. 23, we had the driest May, June since the 1930s, but we had a cool July with timely rainfall. And now we have another one of these. This is the last one of these we're going to get, Casey, for the rest of the decade. We're not going to get another spike in this sun tide upward motion torque on the oceans. This is the last one of these. But the last two times we had a near miss in the ice states, and we had a Gleisberg cycle drought in the northern plains into the Canadian prairies. So this particular signal is quite impactful. And so the fact that we're having it again happen this year with an La Nina to El Nino conversion and everything and the precipitating out of those water vapor aerosols says that this is a year that we need to pay really, really close attention to again. And maybe instead of getting to the 1 yard line and fumbling the ball and not being able to score a touchdown for the Gleisberg cycle, maybe this time we're able to take the ball to the end zone and we actually get a full manifestation of a cycle that's repeated for 11 centuries. I don't wish this upon anyone in the Midwest, but statistically, there was one time in the last 1,000 years that we had a 92-year differential between Gleisberg cycles. The 92nd year would be 2026. The last thing I will mention is that Clyde Bollinger, who's a famous physicist and scientist that did a lot of meteorological work, did a long-term analysis of Midwest moisture, and he looked at the hail cycle. The hail cycle is 2 11-year solar cycles. So you start year one at the beginning of the first 11-year solar cycle, and you just keep counting until you get to 22, which is the end of the second 11-year solar cycle. And he found that in year 2, in year 9, and in year 17, historically, the sun's activity produced consistently lower moisture for the Midwest. It doesn't mean major drought every single time, okay? It just meant on average, those were lower moisture years consistently. So if you're going to look for a major drought, you need to look for them on those points on the hail cycle. It just so happens that 2026 is year 9. And by the way, 2012 was year 2, just as an example. So 1988 was year 2, just as an example. So it's another dot on the map that says this is a year to be very mindful that there's a lot of things that are happening that support this could be something more sinister here. And if those water vapor aerosols were still precipitating out, I would be very cautious, much more cautious. But given that the evidence says that they're no longer coming out, that they've already precipitated out, and we get a clean slate this year, I'm much more, I'm much more worried about what the outcome's going to be this coming season without that extra moisture coming in. That was a blessing for the Midwest to not have to have those moisture levels, because it's allowed for, generally speaking, production to come out all right for the most part. I mean, yeah, there's been some problems up north in the 21. There was some problems in the west in 22. There's been some issues, but for the core grain belt, I think that Tonga has been a blessing, but I don't think that's going to be the case in 23 and in 26, and we just have to see if we get the right setup going into going to May, June, and July, and the key is obviously if we get another hot, dry May and June like we had in 23, are we going to pull a rabbit out of the hat again, or are we going to finally get a July that delivers the goods, which it has not delivered the goods since the 2012 drought, which was the last time we had a hot, dry July. So we'll see. But all I can tell everyone is that everything I've just mentioned supports being very, very concerned about this upcoming growing season in the Midwest, up an order of magnitude more, because the clear evidence that the Tonga effect is now waning. And we're seeing, by the way, global temperatures are starting to really fall. As we talked about how the spike in temperatures came from Tonga, the heating effect from the water vapor. Now everything is unwinding. The Tonga effect is unwinding, and that sets up some more clarity for 26. And now think this through a little further. El Nino's coming. In year 6, year 7 from the trough of the 11-year solar cycle has consistently produced an El Nino every single year for 156 years. Well, 26, 27 is 6, 7 from the trough that was 2020. So we're going to have an El Nino. It's going to start in the fall, and it's going to accentuate into the following year. And so what does that mean for South America? It means central northern Brazil is about as hot and dry as you can possibly get when you have an El Nino, meaning the worst weather that you can possibly get is for center north Brazil is an El Nino. And that means that soybeans may finally potentially catch a weather problem in the next crop cycle for Brazil. Because if you don't hurt Brazil, it just doesn't matter. Right? It just doesn't. Right. It just doesn't matter. Yep. So you got to hurt Brazil. And the only way you hurt Brazil, you got to hurt Brazil in the first part of the growing season. And it's got to be center north, because that's where all the production goes. So if you think this through, you get potentially a major crop problem for soybeans, and then the El Nino continues. What does El Nino do? It's death for second crop corn. So we've had probably one of the most docile weather patterns the last 12 months for grain specifically that we've seen in a very long time. Like we didn't have a single weather related rally during our growing season. Not one, not even a day. Like that's like a 1 in 20 year event where you get no weather related rally during the summer growing season in the US. So what I'm getting at is we have the potential for a kind of a trifecta of U.S. adverse weather for the Midwest, of what we just mentioned. El Nino kicking in, serious hot, dry weather for soybeans for the first growing part of the growing season, and then parlaying that drought into a disastrous second crop corn scenario for the second half of the growing season in the first half of 2027. Boom, boom, boom. Like you could see a trifecta of the worst possible scenario for complementary weather problems in different regions that really, really matter to corn and soybeans. So we may be leaving this utopian weather situation that we've been in, and we may be entering. And of course, if it starts off with a dry and potentially flash frost ridden spring for winter wheat, which kicks off the whole thing, you have yourself a scenario where a year from now we could be talking about how all these weather problems cause all kinds of problems, and we're dealing with shortages in grains, even though everyone thinks we're going to have oversupplied grains for the rest of our lives. El Nino is also extremely bullish for sugar prices because India and Southeast Asia, Thailand, for example, get super, super dry. Cocoa, West Africa tends to get super, super dry as an El Nino arrives. Rice, these are markets that there's just a lot of different markets are going to feel the tentacles of what is about to take place from this big switchover And the very fact that we are not going to have extra moisture in the atmosphere means everywhere it's supposed to be dry could be drier. And everywhere where it's been not quite as hot, it could be a lot hotter. Like we could get back to like some your normal type of El Nino weather pattern. Because the last El Nino we had, Casey, was we had all this moisture coming out and all the dry weather that was supposed to happen overseas. It didn't happen. We had a lot more moisture than we were supposed to have. And so this tongue has been just screwing around with weather forecasting, including myself. It's been a challenge for me because you're trying to gauge to what extent Tonga is going to override the historical weather patterns, and the fact that we've never had one, it's very challenging. So I'm really relieved that we don't have to worry about Tonga anymore, and we can get back down to historical cycle statistics and correlations. And I think the upcoming year we're going to get a much better, clear read on weather, and I think we're going to have a lot more weather-related moves in agriculture. God knows we've had plenty of moves in the metals, and the metals are just about as bullish as you could ever imagine, and they typically go first, and typically, the agriculturals will come along. You just need to get some weather involved, and I think we're going to get that. And that's the long-term picture going all the way out into 27. And I think it starts in March. The beat drum of weather starts in March, and I think it progresses. And I think that's when the ag markets are going to wake up and play catch up with some of the inflation that's been going on in the inflation in the metals prices, and such.
Right on. All right, Sean, good place to stop. Folks will reach out to you and get more information about what you're doing over at Hackett Financial. What's the best way to do that?
Our website is Hackett, Hackett advisors.com. We also have a Twitter page at Faradix11, LinkedIn page as well. We put, from time to time, we will put out some interviews that we've done, some different tidbits on some of the cycles we're looking at, some of the weather forecasts we're doing, so that those that are interested in how we look at the world of agriculture, that might find our work interesting, and who watch your great show, can gain value out of what they're doing in their agricultural operations.
All right. Well, Sean, I appreciate you being in the podcast. We'll catch you again next time.
Sounds great, Casey. Thanks so much.
All right. Thanks, Sean. Stay tuned for more Moving Iron podcast after these messages.
Well, there they are, mocking you.
See you next year, loser.
That weedy area that's got you thinking, man, I hate that spot. Wish I'd sprayed better. Get the last laugh with a sprayer upgrade from John Deere. Precision upgrades that can increase your sprayer's performance, like Exact Apply, advanced nozzles to give you more control at more speeds. It's just one of the many precision upgrades you'll find at johndeere.com. Now, let's see who's laughing.
All right, welcome back to Moving Iron Podcast. Got Aaron Fennell on to talk about what's happening in the market. Aaron, how you doing, bud?
Terrific.
Outstanding. So we got, here it is, first podcast of 2026. Always have a lot of stuff to kind of reflect back on, but also think forward about what's going on in the marketplace. I thought today we would kind of take a look at where we are, kind of what we're seated for right now, and then what we think, how things are going to shape up. Looking back on 26 or 25, any real standouts to you there that jumped out at you, like, hey, I wasn't expecting this, or hey, it ended different than I thought?
Yeah. Increased demand at the dealer level for 8R tractors.
That's, yeah.
Let me rephrase that. Any demand at the dealer level on 8R tractors.
Yeah.
That was the biggest for me. Second biggest, lack of combines.
Yeah.
They always, no matter, I shouldn't say no matter the price, because this is probably why, but even there's never been a time where they just eventually don't plop out the back of the truck, so to speak, like, oh, there's so many, and oh, they're moving. We did, as a company, move a few here at year end, actually kind of a nice little mini run on combines, but nationwide, That's an ugly, ugly spot.
Yeah, I think combines. We talk about combines a ton on here.
A big one for us. This obviously don't apply for every dealer. Shocking. You'll understand why I'm so shocked. Shoppers, self-propelled shoppers, hot ticket this year.
Well, I think it goes back to cattle prices, right?
Well, I know, but I'm just saying.
That's where it's at.
Yeah,
get that feed.
Yeah, it was like the 12th drought almost. Only they didn't go 1,000 miles away. They just stayed here, sold through them. All right.
Yep, it's
like literally. That's one of the first times I can remember flushing an entire cycle of choppers.
Yeah,
very cool.
Yeah, that's didn't see that very often, and typically when something like that happens, it's one of two things. You have there's a drought somewhere, and they got to go out and chop. Those kind of things drive chopper values and chopper selling ability. The other thing too is when you look at where there's a transitional period, sometimes you see that where there's the cattle market on one side or the other is demanding more feed than they've seen in the past, and those kind of things. So obviously, I don't know we're demanding any more feed than we are, but I think there's just a lot more bullishness when it comes around. I'll spend a little extra money on the feed I need.
I would say in a way though, we're going to need more feed in the eventual standpoint, because other than $3 calves had a heavy impact on it.
Yeah.
There is, at the same time you have record calf prices, you're trying your hardest to rebuild the herd that's the smallest. The national herd is the smallest it's ever been.
Right.
So you have your dedicated cow calf guys that are trying to build that back if they have the grass, if they got some money finally for the calves. Right. They can afford to keep back heifers and grow the herd and all this, but at the same time, they go, why wouldn't we sell that calf?
Right. It's hard. It's hard to grow something when you're sitting there with the price that we're setting.
But you have enough of the older generation dedicated to growing that herd back, and by older generation I mean like us and older, dedicated to growing that herd back, that it is going to get there. There just isn't the amount of cattle in the country that there's even thought to be. They're just not there. In the last 10 years, there's been a lot of guys get out, and here we are. So that was a little 15-minute explanation of a statement of, oh yeah, we will need more feed eventually.
Yeah. Yeah. So let's talk a little bit about, you brought up combines, talk about that a little bit, and where we're at that. The combine marketplace, as you watch things roll through, 1-year-old combine market, the number of 1-year-old machines come back to play. So we've talked about this last podcast or two ago. There's not hardly any of those on the plate. I think there's like 700-ish, 800-ish 1-year-old combines on the market, which is a significant change from what the norm is. The 20 plus years I've been doing this, I've never seen where the top side of the funnel is the thinnest, and the middle of the funnel is where it's the fullest at.
Yeah, it's like an oven hood instead of a funnel.
Exactly. Yeah, and it's so, because typically this time of the year, I mean, you're looking at, especially going into where we're at right now, this first quarter of the year, so many machines get delivered.
Right.
Well, what's changed over time is that rarely is there I'm not going to advertise this machine until I get it on my lot, then I'm going to advertise it for sale type of thing. They advertise that as soon as the machine is ready to go. So you're talking 3, 6, 9 months, however long the time frame is to get that out. Most of that stuff is done during order writing periods. So they write the order and it's delivered, this first quarter of the year or typically third quarter of the year, depending on, when and what is going on and all the different stuff that's happening. But one of the biggest things that we see is that cake is kind of cooked as to what inventory is going to look like as we push through it. Now, you'll see once you get past the 1 and 2 year old stuff, you're going to see some inflated inventories and some deflation of inventories, those kind of things as things roll through. But I think what's out there now is kind of what we're going to be working with throughout 2026. Like there's not going to be a huge swing. Not like there's going to be a 3,000 machine swing in March or something like that.
No.
What you see happening now is what's going to take place.
That would basically be every dealer deciding to do completely opposite of what they decided they were going to do.
Right, exactly right. So now, as you watch this thing take place and move forward, I've talked about this for probably the past 4 or 5 years. These blocks of buying customers, what they look like: 1 to 2 year old buyers, 3 to 5 year old buyers, 6 to 10 year old buyers, 10 plus year old buyers, those kind of things. This is the first year that I can really point at it and say
20 plus year old buyers.
This is the first year that I can really point it at that model that I've been talking about and say, hey, these are concrete walls right now and not paper mesh, right? These are hard and fast players right here. And some of those guys that would typically maybe pre-COVID that were buying on the lower end of some manufacturers discount structures, those guys are taking a hard look now, going like, getting a 1 or 2 or 3 or 5% discount or something like that. That juice isn't worth the squeeze to me anymore. I'm going to go take a look at some of this 1 year old stuff that's got a few hundred hours on it or something like that, a season of use type of thing. And you're starting to see more of that play into that decision-making process. The other side of that too is that there's that big group of folks now that are really shopping that 3 to 5 year old stuff. And I think we saw that at the end of the year, that last quarter of the year, that 3 to 5 year old stuff, for the amount of equipment that was in that section, which that's all the 21, 22, 23 model stuff. You go back to like 2020 to 2023, 2019 timeframe, like that kind of stuff right there. And the reason for that was, if you went back and looked at where they had bought stuff in the past and where that stuff lines up at, that's the dollars and cents that make sense to them now. And we've talked about this too, where you're looking at what used to be, I'm just throwing a number here, what used to be 500 hours is probably 750 hours now, right? What used to be 750 hours now is probably 1,250 hours now. Like but those kind of things.
And it's more.
It's more. And that's the factors that are coming into the marketplace right now that are driving decision-making processes that are maybe geared towards, hey, I'm not going to buy new now. I'm going to buy 1 to 2 year old stuff, maybe 3 to 5 year old stuff, right? I'm buying 1, 2, 3, 1 to 3 year old stuff. And then I'm going to teeter on that line, above that line, maybe just a little bit here and there. But what the factor is, because the age of the fleet that's on the farm right now, I don't really have the latitude to say, hey, I'm going to trade my 5 year old something on a 3 year old something, right? There's some stuff there, but what are you gaining when you do that? And that there's a lot of that. Well, that's playing this factors in there, which is slowing buying decisions down a little bit. When you start looking at, hey, I'm gonna run this one more season, and then I'll trade up to what $500 used to be, or something, some kind of scenario like that. As this kind of worked its way through, if you look at auction values and auction equipment, the one thing about the auction marketplace, and this is just my gut right here, kind of measuring stuff throughout my career, but the average auction age is somewhere around 10 years old, 8 plus or minus a couple of years, right? So if you're a 1 to 2 year old buyer, a 3 to 5 year old buyer, a lot of that stuff's going to get funneled into that 6 to 10 year bucket, 10 plus bucket. And to me, that's, if you're looking at this from a perspective of, hey, what do I want to trade in? How do I want to work this? And what's those things look like? There's going to be a conversation that's going to be had. Hey, I'm going to sell it myself. I'm going to take it to auction. I'm going to, whatever, because those dollars and cents that kind of fall into that, it mirrors a lot like what you see happen in the construction market at this point, where you see, hey, I sold a brand new dozer, and I'm going to have a 1 year old machine. I'm going to take one trade in, and I'll take maybe second trade in, and then most construction guys are kind of done at that point. You have a conversation with a construction guy, and they're talking to you about how we trade combines. Like, I don't. What are you talking about right now? It's the most ridiculous thing I ever heard in my life. And a lot of that is because for the most part, unless you're talking like a screener or asphalt crusher or something like that, like it's a tractor,
Right.
basic thing, right? You don't have a lot of wear parts and those kind of things, which is the disconnect when you start talking about that kind of stuff. Because where if you're trading, there's a lot more functionality when you're thinking about, hey, I'm hitting a reconditioning point, or hey, I'm outside of warranty, and I don't like this, I don't like feeling like, there's a bunch of different things that come into play on that. The tractor's a completely different conversation than the combine, and I think that's one of the biggest disconnects. But as you watch the movement of how this transitionary period hits, there's not enough machines at the top to replenish what's going on in the middle. So once the 3 to 5 year old stuff kind of gets picked through, and we're kind of back to some equilibrium here, that completely changes the marketplace. When you start looking at supply and demand, and you start looking at how people are going to start functionally thinking about going out and buying a piece of equipment in 2026, which I think that happens in the first quarter. As you start looking at the second, third quarter of the year, going into the fourth quarter, the thought process of people when they start looking at what they're going to do with their equipment, how much longer they're going to run it, if they're going to trade it, those kind of things, that process changes from what we've seen in the past. Even 3 to 5 years ago, like that process completely changes and how people functionally think about their equipment and when they're going to move it. The reason for it is the demand signals that are out there, what's available for sale, because that's another driving factor too. Is there's a spec driven used equipment. That's a big thing, right? I mean, if you don't have the right specs for the piece of equipment that you're looking for, there's some standardized used equipment options that are out there that people are looking for. And if those aren't readily available, it really functionally changes the way people look at the marketplace. There could be some of that happens right now just because of people trying to get through the time that we had where they made a step back away from some specs on machines to cheapen up the machine when they start looking at how they were going to buy the machine and down payments and all the different stuff that come into that. Some of those specs could be a little bit different as we start looking into what this crop of 1 to 2 year old machines look like comparatively to what we've seen in the past.
Oh, for sure. One thing I would say is, real quick, to go on with that, the bulk of machines, the what's left of the glut, obviously, is that 3 to 5. There is so much pressure on that 6 to 10 because of the 3 to 5 hanging around yet. Yeah. And I think there's going to be, I was going to say a lot of blood, but it's kind of like death by paper cuts at that point, because it's a different, it's kind of like our old problems. Okay. The percentage is such a big chunk of the machine versus you worry about and down here you worry more about that percent number, whereas up here in the 1 to 3 you worry about not the percent number, what that percent means. Okay. So 5% over here is 25% over here or whatever. Sure. But the blood to be had to get those right, there's a lot that needs to happen there. And there's just because that world has, I wouldn't say ballooned, but it's definitely increased. Now, without talking out of both sides of my mouth, in the last month and a half, guys who have those trades, very rarely is that guy opposed to selling that himself.
Correct. Yeah.
And the biggest factor is they know they're upside down.
Well, I also think too,
the amount of guys I talked to from November 1st to the end of the year with that, say 5 to 10 and upside down, bad.
So a couple things. One, I think when you start looking at 6 to 10 year old equipment,
let me finish that. Upside down in the amount of it, we can't just trade it. We got to come up with more and some extra down money. You know what I mean? Yeah. They don't have the right equity position. it might be 20,000 on a $150,000 tractor, but you're normally that tractor, by year 3, you're like, well, we can trade it on anything.
Yeah. So I think a couple things to keep in mind here. So if you go out and talk to guys at Jockey Equipment and really look at it, they're going to tell you that, hey, we're running out of equipment, right? And they're talking about that 6 to 10-year-old stuff. There's not a lot of 6 to 10-year-old stuff out there. There are different shades of 5,000-hour tractors, right?
Right.
There's, you know what I mean? So like I can have a 5,000-hour tractor that I polish at the end of every year. I change the oil when I'm supposed to change it. All the fluids are up to date. All the filters are good. I got excellent tires, no stubble damage on my tire. All the stuff, right? It's
we put
amazing
carpet in the cab on top of
Yeah.
the floor mat.
Right.
Oh yeah.
Yeah, all that stuff. Now you got the other. Then there's the one sitting right beside. It's got 7,000 hour on it, and it looks like you ran it through a war zone, right?
3 different shades of yellow wheels on it, and a
Right.
white hood, and
now mechanically speaking, they're all the same,
right.
But what the presentation of one versus the presentation of the other one can dramatically change the way things look, right?
Dude,
Now,
on a 5,000-hour tractor, it could be as much as a 25% ratio of tire tread.
100%. So I think when you're
It is
looking
the
at
littlest, dumbest
Yeah.
in that realm that moves the needle.
the one thing about that I think is worth noting is that obviously the better. I mean, I'm preaching the choir here, but I mean, the better you take care of your stuff, the more presentable it looks. Those kind of it all makes a big difference in how you operate it and what it looks like. If it's only lived inside the big blue shed all its life, that's totally different than if it's parked inside of an actual shed someplace. All that stuff matters, right? What I think. What really drives that 6 to 10 marketplace, 16-year-old marketplace and 10 plus marketplace is the quality of equipment that's available at the time, right? It's not like no one has a herd of unicorns that they're going to bring to the sale and sell them. There's like one that, oh my God, this thing sold for $225,000. Well, and everything else around it sells for 150. 175 because it was the quality of the 225. Now, the quality of the 225 sets hey, this is a premium market, right? And this is what good looks like and average looks like and all those different makeups. But at the end of the day, there's like 5 super premium awesome machines, and then there's 250,000 of everything else, right? You have 5% of the market that's could be considered premium. You've got 95% of the market that is average to good, and then you've got this other, or 90%, and then you get this other 5% that is salvage junk stuff that nobody wants. So it's all falls into that spectrum somewhere. And that's the key thing, understanding what that market, what drives that marketplace.
To your point, Casey, we spent the last couple months talking about the year-end have to. Right? There's now we necessarily don't have a tax problem. We necessarily can't afford it, but this thing is a steaming pile and we got to jump.
Right.
There's a lot of that in the 6 to 10.
Yeah. A lot of stuff. I mean, there's a lot of mechanical transmission hydrostats.
Right. To your point, coupled onto my point, that's why there's so much problems because there ain't much cherry in that pot to start with. And if the number's wrong, oh, damn, now what?
Yeah. I mean, I think that's, again, going back to that, what drives that marketplace is it's not the cosmetic stuff that, oh, my God, this is so beautiful. Hey, there's a noise in the transmission we can't figure out, right? The rear end's got some kind of a noise in it we can't at a
ILS never saw a grease gun.
Right. I mean, there's things like that I looked at so many tractors where the grease zerks are broke off. Like they're not even there anymore, right? You got to get it easy out to get them, to get them out. I mean, like those kind of things, that changes the way things look. So if you look at all the functions of a mechanical components of a tractor or whatever it is, combine's a completely different conversation, right? Rarely, not saying you don't have engine problems with combines, but how many times have we had a conversation about, oh, that combine's got a bad engine, we can't trade it? It's, oh, this combine needs 20 grand worth of wear parts. That's
Right.
the needs, not wants. It's needs it to get it to go so it can functionally work next year, right?
Right.
Like those are the kind of conversations you have on a combine. A tractor's conversations you have are transmissions slipping, or engine's got a knock in it, or rear end's bad. The ILS on the front end is leaking and it needs to be rebuilt. Like there's like all those are the fundamental things that come into play.
Oh yeah.
When you start looking at the 16-year-old stuff, those are the things that drive the marketplace.
Yep.
Because there's more of those things in there. Because again, for the most part, when you start looking at a tractor, somewhere between 4,500 and 6,500 hours is like the first time that you really come into on average, right? That you really come into some major repairs that are going to come into play, right? And that's what that looks like. So if you're a guy out there that wants to keep a tractor to 4,500 hours, that's awesome. Buy the warranty.
Yeah,
right?
I was just gonna say,
Buy the
don't even worry about the shop bills. Just buy the damn warranty and drive the wheels off it.
Yeah, and if you're buying a used one at 3,500 hours, call the guys at Machinery Scope and have them hook you up with a. Like,
I did that at the end of the year.
Yeah,
I had an 8R370. It only had 1,800 hours, but it was just out of warranty, going 1,000 miles away. Hey, guess what? 3 year, 350 hours a year, $9,600. That no more worries. Here we go.
Yeah, and those are going to be the things that you have to really think about when you start looking, because that's another thing too. Like guys are going to like the time of which you're going to trade your machine in, and those trade cycles and stuff like that, they're getting longer. So, I mean, it's up to you to do whatever you want. But if I was going to run my machine for one more season I felt comfortable with, I'm going to have at least one extra year of warranty than what I would normally have, right?
Yep.
And if you start with zero, if your typical warranty is zero, throw a year on there, just because. I mean, it's just, if you're buying something that's got 4,000 hours to 6,500 hours on it, somewhere in that range, you're going to have some issues that pop up, and they're not cheap issues that pop up. They're going to be some issues that come into that. And I think that's where you start looking at, hey, what's that? How am I going to protect myself as I try to prolong my, try to get ahead of the depreciation curve on these machines, to where my throughput and depreciation meet finally,
Right.
and I'm in some kind of an equilibrium. Those kind of things to me make a big difference. That being said, as you watch this marketplace take control, take heed of what's going on here. One of the biggest things I will say, that this market more than ever is going to be driven by the quality of equipment that's being sold. In the past, it's always been like, hey, we got a bunch of it, right? So take your pick. Which one do you want? And I'm not saying that, hey, we're past the glut of stuff, because we're not. We still got to work our way through some of that stuff. But all that being said, you have to step back and take a look at how is my $350,000 machine going to be different than somebody else's $350,000? Right. How am I separate? How is my 7-year-old whatever different from the other 7-year-old things that are out there?
For sure.
And that makes a big difference in how things functionally work inside of that. Because again, not that quality of equipment hasn't always been a thing, but I think it's going to be a bigger thing in 26 than it's ever been in previous years as far as driving market value.
Oh yeah. Yeah, I would agree with that.
Okay. All right. Probably a good place to stop, Aaron. Folks want to reach out to you and get more information on what you're doing at High Plains Wholesale. What's the best way to do that?
Well, you can catch High Plains Wholesale on TikTok and Facebook. You can catch me on Twitter or X at Aaron Fintel, and also on Facebook and LinkedIn. Call me or text me, 308-760-1193.
Right on. Casey Seymour, you can find me anywhere podcasts are. You can find Moving Iron Podcast anywhere. You can find them. You can go to the Farm Journal page over there at AgWeb, and there's a podcast section. You can find the podcast there. You can go to the YouTube channel, which is Farm Journal's YouTube channel. You can check it out there. You can see the video version up there. You can also find us on Facebook, X, Instagram, TikTok, anywhere. anywhere you can go, either at Moving Iron Podcast or Moving Iron LLC. You can find it all there. I want to thank Greg Machinery, Pete Peterson, Sean Hackett, and Aaron Tindall for being on this edition of Moving Iron Podcast. Remember, folks, a lot of dynamic things are going to be happening in 26, I think, for the positive. So if you're in the marketplace to start looking at machinery, I think this is a great time to start making that plan as to what you're going to do as things roll through in 2026. So with that, I'm Casey Seymour. Let's go move some iron, folks. Out.
Thanks for joining us. We'll see you again next week. And remember, Moving Iron is available on Farm Journal's YouTube channel and anywhere podcasts are found. So until next time, let's move some iron.